The FX market managed to stabilize into the latter half of the day after a wild twilight zone start that saw dollar-yen in a flash crash freefall. There was collateral damage across the board, with the most striking in the Australian dollar, which sunk to its lowest levels against the buck since 2009. The fact that Japan was out on holiday only made the moves that much more extreme before some semblance of liquidity returned. The primary catalyst for the move was sourced to Apple news after the tech giant downwardly revised revenue estimates while acknowledging that it underestimated the slowdown in emerging markets. This was the first time Apple cut its revenue outlook in almost 2 decades, and the news sent chills down the spines of investors as it called into question the state of what has been a very fragile recovery since the 2008 financial markets crisis, a recovery a lot more exposed these days, no longer having that wind of unprecedented central bank and government stimulus at its back. But as per the opening of this call, markets have found some stability. Dollar-yen is well off its low, and Aussie the same. The euro is trying to push back up, and the pound is following the euro's lead, enjoying a break from the stress of Brexit, at least for the minute. The Canadian dollar is finally enjoying a session of demand, clearly getting a boost from the run-up in oil out from depressed levels. The market will now be watching to see what comes of the U.S. government shutdown and how things progress on that front in the days ahead. Looking to Friday, the big first-tier release of the day will be the monthly jobs report out of the U.S. Canada employment is also on the docket, along with earlier releases of German employment and Eurozone inflation readings. That's all for now.